The biggest housing bust since 2008 keeps getting worse in 2025, with new data from the National Association of Realtors showing that pending home sales dropped again in June. They dropped 2.8% year over year, and now we have the lowest number of contract signings that we have seen going back 30 years on the US housing market, everyone. I want you all to think about that. The number of buyers going to buy houses and going into contract is now lower than it was in the 2008, 2009, 2010 housing crash. So quite legitimately, this is the biggest housing bust ever in terms of the decline in buyer demand. And as I travel across the US, I'm just seeing more and more of these markets that were once these big boom towns, they are now entering the downturn. And this is very interesting. This is very reminiscent to what we saw back in 2007, 2008 at the beginning of that last crash. It was the boom towns that started going down first. It was the boom towns where the inventory went through the roof, and then it spread all across America. Now, I am personally a big fan of Nashville. Many of you know I used to live in Nashville, and I come back here frequently because I think it's a great part of the country. It's a great place to live. However, the houses are simply too expensive. In this zip code that I'm standing in right now, which is about 30 minutes south of downtown Nashville, home values are 40% overvalued. They exploded way beyond people's incomes. And the thing that's happening now in response is the demand is going down. So the home sales in the Nashville metro are down about 13% from normal, and they're down 25% from the pandemic peak. So a lot of people still talk about Nashville like it's this boom market, but that was really the case 3 or 4 years ago. It's no longer the case when you look at the housing market data. The sales are down, the inventory's up. In the Nashville metro, there's now almost 11,000 homes for sale on the market. That's the highest level in 10 years. It's a record amount of supply, and these homes are often just sitting unsold because sellers are still coming to market at prices that make no sense, because there's a massive disconnect between where sellers are and where buyers are. Buyers are constrained by how much prices went up and mortgage rates and their incomes, and they can only afford a certain price. Sellers, on the other hand, have some phantom illusion of what they think their house is worth that's not based in any type of reality. So what we're continuing to see this summer is that we have sellers in a down market over-listing their house, and these houses sit on the market for months and months, and they maybe cut the price $5,000, and it just sits there. And when you talk to the realtors in these markets, they express a lot of frustration with sellers. They're basically saying a lot of these sellers are clueless about what's going on. Now, there are buyers who want to buy, but they can't afford these prices, which is why the pending sales index is at the lowest level in 30 years. It's why the mortgage application index just dropped double digits week over week. Mortgage applications are still close to the lowest level in 30 years, and builders now are also reporting sluggish home sales. So make no mistake, everyone, the first half of this housing crash has already happened. The demand has collapsed, and the demand is not going to come back until we see prices drop by more. And this is just one example of what I'm talking about, everyone. This is a house that's on the market for around $520,000 here in Thompson Station, Tennessee, and really we're also close to a town called Spring Hill. Now, I'm actually starting to look at buying a house, and I'm going to be using the data on ReVenture app to do that, to secure a discount. And so I'm really getting in the mindset of you guys out there as well, like who've been looking to buy in the last couple years. And again, folks, I want you to think about what paying $500,000 for a house means in today's market. At prevailing mortgage rates, it means your payment's $3,500, $3,600 a month here in Tennessee. If you're in Texas or New York or Florida, where the taxes and insurance are higher, it means your payment is north of $4,000 a month, which would be $48,000 a year. And people just simply don't have the money to afford that. The median household income in the US is $83,000, $84,000. So there's just this affordability situation, everyone, where Americans simply cannot afford the houses at the current price points, which is why the demand is so low and why we see crashing pending home sales. And I think a lot of people in the real estate industry are struggling to comprehend this. You know, especially the Trump administration, everyone. The Trump administration is, getting out there, and their heads of real estate in the Trump administration are talking about, like, Fed needs to lower interest rates. It's all about interest rates. It's the prices that are too high. It's the prices that are at record levels. And if we actually look, folks, and we talk about like what would bring affordability back into the market, what would make these houses more affordable? Would it be mortgage rate declines or would it be home price declines? Well, look at this chart I put together for you guys. This is an affordability matrix on the US housing market. And we're looking at the typical mortgage payment, inclusive of taxes and insurance for home buyers. Right now it's $2,800 a month here in the bottom right of this chart. $2,800 a month, which corresponds to 39% of median income. That's way too high. It's why demand is so low. Now, say mortgage rates, which are around 6.8% today, were to go down to 5.8%. So say mortgage rates were to go down 100 basis points from 6.8 to 5.8%. What do you guys think that would do to the housing market and demand if mortgage rates dropped by 1%? I want you all to think about it for a second before I reveal the answer about what it would do. Because I think a lot of people who work in real estate think, oh my gosh, that would cause all the demand to come back into the market. Well, would it? I mean, if we take a look at the chart here, that decline in mortgage rates from 6.8 to 5.8% would only lower the monthly payment to a bit less than $2,600 a month. $200 a month savings on the monthly payment. That's not even a 7 or 8% relative improvement on the monthly payment if mortgage rates drop 100 basis points. And when you look at that, you realize, oh shoot, mortgage rates are a pretty small component to this housing market right now. And you say, okay, well, what if mortgage rates were to drop to 4.8%? What if mortgage rates went down to 4.8%? Well, that would reduce the monthly payment to around $2,400 a month, $2,350 a month. Better, but still about 33% of income. What if mortgage rates were to drop to 3.8%? Well, that would actually lower the monthly payment for the US home buyer to $2,100 a month, which would, I think, bring buyers back in. I think if mortgage rates dropped to 3.8%, we would see buyers come back in. It would make affordability cheap enough. But even then, you'd still only be at a 30% mortgage payment to income ratio. Wouldn't be that affordable. What you really need to gain affordability access and allow home buyers across the US to participate in the market, you need prices to drop. That's the other side of this chart. Prices dropping from the right to left, that's what instantly makes things more affordable. If prices were to drop 15% and mortgage rates were to go down to 5.8%, all of a sudden the monthly payment's down to $2,100 a month. And you have a much more reasonable housing market where home buyers look at houses, feel like they can afford them, and they start buying. And that's the ultimate thing that sellers need to understand. If you want to sell your house, if you need to sell your house, you can. You just have to cut the price. You just have to cut the price to a market clearing level. And emotionally, that's very difficult for a lot of sellers because a lot of sellers kind of look at their house as like their baby, or they look at their house as like their net worth. So if you try to tell them that their house isn't worth what they think it's worth, they take that as like a personal insult. And that's a situation that's leading to just massive inefficiency in the market where there are buyers to buy at certain price points, but the sellers just aren't willing to get there. And ultimately, the responsibility is on realtors to educate their sellers about where they need to be to sell their house, and to also educate them on the upshot of selling in today's market. Because folks, in Nashville, prices are gonna drop. At Reventure App, we have a minus 7.2% 12-month forward forecast for Nashville. We think the prices in the metro are gonna drop 7%. In some zip codes in Nashville, like near downtown, north of Nashville, west of Nashville, we think prices are gonna drop over 9% over the next year in some zip codes. Here in Thompson Station, Spring Hill, we think prices are going to drop more like 4 to 5%. Won't be as big a correction, but still a 4 to 5% decline indicates that if you're a seller, you shouldn't be waiting. You shouldn't be delisting your home. You shouldn't be overlisting at an excessive asking price. You should be moving to sell this house as quickly as possible. There's an interesting example of a house for sale in this neighborhood, and this one's actually under contract. Interestingly enough, we'll have to see if it actually sells and how much it sells for. But it's listed for $539,000, 3-bed, 3-bath, 1,900 square feet, everyone. Pricey house here. Prior to the pandemic, it sold for $335,000. So you can see they increased the price 61% over the last 5 years. In the process, mortgage rates have gone up, inventory's gone way up, but this seller thinks that they can find a buyer at $539,000. And maybe they will. There still might be occasional houses that sell at prices that are higher than they should, or prices that are above market. That still might happen, especially in a neighborhood like this where the schools are really good. So here, south of Nashville, Thompson Station, Spring Hill, we're in Williamson County. And in Williamson County, it's some of the best schools in the South, some of the best schools in Tennessee. So if families move here, they instantly flock to a neighborhood like this just for the school system. And that's why you see some more resilience occurring in a neighborhood like this that has higher incomes, higher home values overall, and where the schools are better. There's a more stable demand pool. And you also don't have as many sellers like rushing to sell in a neighborhood like this because they have often higher incomes, they can afford to weather a downturn, and there's fewer investors. So when we look at this map of Nashville's housing market, we can see where I am right now in the zip code 37179, you can see that over the last year, home prices have been more stable. So over the last year, prices here are roughly flat, up 0.8% in the last 12 months. And if we zoom out on this home price map of Nashville over the last year, you could see the areas more in translucent or red or are doing better are to the south. Brentwood is doing the best. Brentwood is up 4.4% over the last year. But if you go further north to downtown Nashville, the east side of Nashville, North Nashville, West Nashville, that's where the values are already dropping year over year. So this isn't even hypothetical anymore. In a lot of parts of Nashville, the prices are dropping in about half the zip codes. And on a metro basis, Nashville's prices are roughly flat year over year. But going forward, they will be dropping, given the big surge in inventory, right? Last year, we were around 7,400 homes on the market. Now we have almost 11,000 homes on the market. And in the process, the Reventure Price Forecast score for Nashville has dropped from a 42 to a 30 in the last year. So about a year ago, we thought Nashville would drop around 1.5%, 1.7%. It ended up being flat. Now we're saying Nashville is going to drop 7.2%. And don't let the mainstream narrative of Nashville about like all the people moving here and like, Elon Musk now wants to do the Boring Company, wants to do tunnels under downtown Nashville. Who knows if that's actually going to happen. There's a lot of hype always around this market. And for some good reason, a lot of people have moved here. But that hype isn't stopping inventory from exploding. It isn't stopping price cuts from surging. The days on market in Nashville is now at the highest level in 10 years. So what you should do as a seller or a buyer, no matter the market, is dig into the data. So you have a firm understanding on where things are heading. So you're not going to be duped by someone trying to tell you something that isn't true or trying to tell you incomplete information about what's going on. And that's what's great about Reventure App, everyone. On Reventure App, we have all the data you need as a home buyer or seller to have clear confidence and clarity about what's happening. What's happened with prices over the last year? You can access that data for free. What's the current inventory level? You can access that data for free on Reventure App. But then to take it to the next level, you can upgrade to premium to see our 12-month forecast and to also see the overvaluation rate. And one really exciting thing I want to announce, everyone, is we just had a home buyer in Nashville use Reventure App. It was a Reventure App premium user, and they just bought a house in Nashville and saved $50,000 on their home purchase by using Reventure App. This user just left us a review in the App Store on iOS, and I'm showing you the review right here. They basically said they used our price forecast, which showed values were going to drop around 5% in their area. They used that forecast to negotiate with the seller, and they ended up saving $50,000. They got the house $50,000 below asking price. They got a $50,000 discount using the data on Reventure App. And so that's the power of this data, everyone, especially if you're a prospective buyer too. You can use this forecast to actually save yourself tens of thousands of dollars on buying a house. I mean, does that sound like a good deal? Pay $39 a month or $399 a year for an annual subscription to potentially save $50,000 on your home purchase. That's now what's happening with our users who are using this premium data on Reventure App. At the end of this video, I'm going to let you all know how you can sign up for that premium plan and get access to this data so you can go find the discounts. But in the long run, I do like Nashville's market. I am bullish on it in the long run, say over 5 to 10 years. Our long-term growth score on Reventure App has Nashville ranked above average in terms of long-term growth potential. And this is a market that's got good weather. It's not really affordable anymore, but I wouldn't call it like crazy expensive. It's somewhere in between. It has good job growth, and it's in a state, Tennessee, that has no income tax, right? So those are like the positives. for Nashville and Tennessee over the long run, and I think this market will grow over the long term, right? We need to kind of segment here what's going to happen in the short term versus what's going to happen in the long term. In the short term, prices went up a bit too much. The incomes here don't support the prices. We need to see a correction to allow buyers to come back in and support the market. And ultimately, folks, that correction will be good for Nashville. I think this is another important thing to understand about a housing market correction. It's actually a good thing for a growing market like Nashville. You know, we don't want houses costing $540,000 that cost $330,000 5 years ago. That's not good for growth. That's going to cause more people to leave. That's going to cause more people to say, hey, I'm going to hold off on my plans of moving to Nashville. We actually want more affordability to come into the market to allow the area to grow more into the long term. To grow further into the long term, we need to have more affordability. So I would encourage many people in real estate, especially many sellers, many homeowners, realtors, look at a market correction as positive news. It's going to mean more buyers are going to be able to afford homes. There's going to be more transactions and more people will be able to move back into the city. You know, one thing we did see in Nashville is the migration has dropped. The migration in Williamson County has actually plummeted to the lowest level in 30 years in 2024, according to data from the Census Bureau. Why? It got too expensive. So people can't afford to move here anymore. In the end, we want those migration numbers to go back up. We want Nashville to be a place where the average household can actually afford to buy a house. That's going to be fundamentally good for the city, good for the metro area in the long run. So I encourage people to embrace this housing market correction that has started in Nashville and that will continue over the next year. And I would encourage you guys, if you're a buyer, a seller, realtor, or investor, make sure to access the data for your city and zip code on ReVenture app so you can understand where prices are heading, how over or undervalued they are, and dig into the other fundamental data on demographics and investor metrics to help you, in the end, buy houses at better prices. If you're a seller, save money by listing at the right price, understand where the market is heading. And if you're a realtor, you can use this data to educate your clients and help them close on homes. This is the big thing we have seen now at ReVenture over the last year. Our app is helping facilitate transactions by bridging the gap between buyers and sellers. So go to www.reventure.app, sign up for that premium plan. The cost is only $39 a month or $399 a year if you sign up for that annual plan. That's a 15% discount on the monthly rate. I would recommend that you guys sign up for that annual plan so you can access this data going forward. I know for some of you, your home search is going to take 6 months, 7 months, 8 months, maybe a year. Sign up for that annual plan so you can get access to this data on an ongoing basis, see how the forecast is shifting, and find the right time and place to buy.